Okay, good morning. Good morning, guys. Hope all of you are doing good. So today we are just going to be dealing with cost accounting. So we'll be dealing with the difference between our direct or variable method and also our absorption method. So we are going to deal with only structures so that you can know the significant difference between them, because when calculating our net profit, its applications are quite not the same. So we're just going to be looking at the do's and then those of the method. So let's start with our direct or variable method. This one has two methods. You can either call it, or when they assess you in exam, they'll either use the direct or variable username. So according to our direct method, when calculating our net profit, they're treating what? They are going to treat our fixed manufacturing overhead cost as a what? As a period cost. Meaning they are treated not as manufacturing cost, but then rather as a period cost. So let me show you, according to this method, how they actually calculate their net profit. So they will start with their sales here. And then normally when you calculate your sales, you'll say selling price per unit multiplied by the unit sold. Selling price per unit multiplied by the unit sold. And then you say less of variable. Remember that they treat the fixed manufacturing cost as what? As period cost. So they less variable cost. And then another variable cost, these are the items that falls under the variable cost, direct material. Remember that our direct material is a variable cost because it changes according to our production. When production increases, our variable cost is going, pardon me, our direct material is going to increase, and also when our production decreases, is going to decrease. And then also direct labor. Direct labor is a variable cost. And then we also have what? We also have variable manufacturing. Variable manufacturing overheads there. Variable manufacturing overheads. And then we also have what? Variable selling and distribution cost. And then they have a relevant amount, we're going to record them there, and also here. And then when you add your direct material amount, your direct labor, your variable manufacturing overheads amount, and also variable selling and distribution amount, we get this total, which is the total of what? Of variable cost. We get that total. Then let me highlight it with red there. We get the total of variable cost. And then when we say our sales minus our variable cost, we get what we call marginal income. We get what we call marginal income. And then remember that according to your direct method, we are treating what? We are treating our fixed cost as well as period cost. Meaning we have to record our fixed cost there, and then you say less fixed cost. Less fixed cost. And then your fixed cost, you have two types of one. The one of manufacturing fixed cost. And then lastly, you have what? You have your selling and distribution there. And then you record the respective amount there and also here. And then after that, you say your fixed manufacturing overheads plus the one for selling and distribution. The one for selling and distribution. I don't know my there, guys. Plus the one for selling and distribution, and then you'll get the total for what? For this one. I'll also highlight it with what? With red. Let me highlight it. You get the total. And then when you say your marginal income minus your fixed cost, you get what you call net profit. Net profit. You'll get the net profit there. So that is a what? That is how we calculate our net profit according to our variable method there. We treat our fixed manufacturing overheads as what? As period cost. And then what about the absorption method? Under the absorption method, this absorption method basically, absorption method. This is how we're supposed to prepare according to the absorption method, this is how we're supposed to prepare our things. We use it for financial reporting according to what? According to GAAP principles. Let me say two. According to GAAP principles. According to GAAP principles, these are supposed to prepare our thing. So this one, they're not treating what? They're not going to treat their manufacturing overhead as a period cost, but then rather as part of their manufacturing cost. So these are we prepare them, sales. And then with regards to the sales, remember that what are they going to say? You'll say, normally we say the number of products that we produce multiplied by the selling price. Number of products that we produce multiplied by the selling price so that we get our sales. And then after that, we have our manufacturing cost. We less our manufacturing cost. Less manufacturing cost. And then with regards to the first method, remember they said that we said less variable cost. This one we less our manufacturing cost. Our manufacturing cost, we know that we talk about direct material. Manufacturing cost directly. Direct labor. And what? And selling and distribution. Pardon me, not selling and distribution. Apologies, guys. Manufacturing overheads. And then you know that our manufacturing overheads, these are all of our indirect costs that relates to the production, which is what? They can either be fixed or variable. Fixed or variable. So according to this one, so you can clearly see that the manufacturing overheads basically, manufacturing cost. According to the manufacturing cost, basically, these are the costs that we incurred in order for us to produce a certain item. And then we know that for us to produce a certain item, we are going to incur our direct material, our direct labor, and also our overheads. But then our overheads are segregated between the two, which is the fixed ones and also the variable ones. The fixed ones, they all remain the same regardless of the production. An example of a fixed manufacturing overheads, we refer to the likes of rent income. Our rent income is not affected by production. Whereas the variable ones, we talk about what the likes of water and electricity and so forth. And then when we add our direct material, our direct labor, and also our fixed manufacturing overheads, plus our variable manufacturing overheads, we get what? We get the manufacturing cost, which is the cost that we incurred when we produce our certain item. So when you say what? We'll say our sales minus what? Sales minus our manufacturing cost. And then when we minus both amounts, we're going to get what you call gross profit. Gross profit. And then after that, we have you're going to less your selling and distribution. Under the selling and distribution, you have your what? Now, selling and distribution, that they are either fixed and variable. They can be fixed and variable. And then you record the respective amounts there. And when you say your fixed selling and distribution amount plus, in fact, selling and administration, apologies. Selling and administration, that's it. Selling and administration. Even here, it's supposed to be selling administration. And then our selling and administration amount can either be fixed can be fixed and variable. Can be fixed and variable, and then their respective amounts, you're going to add them fixed plus variable. And then after doing that, you get the total there. We're selling and administration. And then when you say our gross profit minus what? Gross profit minus our selling and administration, we're going to get our net profit. So that's how we calculate our gross profit, net profit according to those two methods. So you can clearly see that the significant difference is mainly on what? It's mainly on the application of fixed cost, how they treat their fixed cost. And then remember that the absorption, this one is recommended according to GAAP principles. And then for today, I only want us to deal with these structures. So please learn these structures as they are important and also know the terminologies in which are used. Remember that one can either they can either say direct or variable method. Other than that, thank you guys.